Hello, welcome to the European Open briefing for Friday, October 6th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. So things are looking up for the US dollar. We had more positive data released yesterday out of the US, as well as some hawkish comments from Fed policymakers, and we are also seeing some signs of progress being made on Trump's tax plans getting through Congress. The pound is at a 4-week low as political uncertainty continues to trouble the British currency. Prime Minister Theresa May is facing increasing pressure to resign following her party conference speech, which didn't go down too well. The Australian dollar is also under pressure amid some talk of a possible rate cut by the Reserve Bank of Australia, and the euro is also down against the dollar following yesterday's fairly cautious meeting minutes from the ECB, as well as the ongoing crisis in Spain over the Catalan independence bid. Well, let's first start with the US dollar. We can see the dollar index has been steadily climbing upwards since late September. It hit a 7-week high of 94.11 this morning. Dollar yen, though, appears a bit range bound at the moment, and it's been going up and down between the 112, 113 range. That could possibly be due to the elections in Japan, where the Prime Minister Abe's popularity has come down a bit, which would make it more difficult for him to pass through easy fiscal and monetary policy if he was to be re-elected. But moving back to the US now, yesterday the FOMC members John Williams and Patrick Harker both said that they expect one more rate hike in 2017 and 3 more in 2018. Yesterday we had solid data, including weekly jobless claims. US trade deficit came in lower than expected, and factory orders were also above expectations. The focus later today will be on the non-farm payrolls report for September. This might not cause as much excitement due to the fact that it will likely be heavily distorted by the hurricanes that we saw in early September, and the jobs growth is expected to come in at 90,000. That's the first time in some time that it would be below 100,000 if confirmed. But also supporting the US dollar this morning is the US Congress yesterday approving a blueprint on spending plans for fiscal year 2018, which, if it does pass, that would only require a vote in the Senate to pass the tax reforms, making it much easier, much quicker for that to get through. So the tax reforms are looking more and more likely, and that's being very supportive of the US dollar. Moving on to the pound now, we can see that the pound has been drifting lower against the dollar and the euro. Against the dollar, it hit a 1-month low, 1.3059. The euro rose to 3-week high of 0.8954 as traders continue to speculate over Theresa May's future. So we are reading reports this morning that former Conservative Party chairman Grant Shapps has now the support of around 30 MPs, which they will be asking Theresa May to stand down. According to Tory party rules, it would take the support of 48 MPs to trigger a vote of no confidence. But even if that level isn't reached, or they decide not to go ahead with triggering a vote of no confidence, it's still putting a lot of pressure on Theresa May at a point where she needs to be focusing on the Brexit negotiations. There was little response to comments by Bank of England policymaker Ian McCafferty, who reinforced expectations of a rate hike later this year, saying that the markets are right in moving forward their expectations of a rate hike from 2019 to late 2017. Let's have a look at the Australian dollar now, because the Aussie continues to struggle against the US dollar. We can see that it's been heading lower since late on Tuesday. We had retail sales numbers yesterday which disappointed. Apart from that, the Aussie has been somewhat weighed recently from a sharp sell-off in iron ore prices, but the main trigger this morning was an interview in the Wall Street Journal by RBA board member Ian Harper, who said that that given the slow wage growth, which is creating slow growth in household income, that could lead to loss in momentum, which would require some sort of policy action. So that suggests that the RBA hasn't totally ruled out a rate cut. We also had a report by Morgan Stanley saying that Australian households are facing a credit crunch. So all of that is now opening the possibility that the next move by the RBA will be a rate cut rather than a rate hike. We saw the Aussie slipping to 3-month low 0.7741 against the US dollar. Let's move on to the euro now, because we are seeing a continuation of that crisis in Spain. The Catalan Parliament was due to meet on Monday to discuss whether to declare independence. That's not going to be possible now that the Spanish Constitutional Court has banned that session, because it considers it to be illegal, given that the independence referendum itself was illegal. That took place on Sunday. On top of that, we have the ECB's meeting minutes, which struck a cautious note, although they confirmed that in October they will most likely make the bulk of the decisions on tightening policy. They were clear that they want to maintain highly accommodative monetary policy under whatever scenario they decide to opt for. Plus, they did express more increasing concerns about the strength of the euro. So all of that has driven the euro to 7-week low 1.1684 against the US dollar. A quick look at oil prices now. We can see yesterday that sharp rally of around 2%. That came on the back of comments by Russian and Saudi officials that the current upward tilt could potentially be extended until the end of 2018. We are seeing prices come down a little bit this morning for both WTI and Brent crude. That could possibly be due to some profit taking, but also we have another tropical storm moving on to the Gulf of Mexico. Storm Nate could potentially develop into a hurricane, and it's currently heading towards a region where several offshore oil platforms are being operated. That could cause some possible disruption. So that's why we're seeing that slight dip in oil prices this morning. Looking at today's economic calendar, we just had the German industrial orders, which came in well above expectations in August. The main focus later will, of course, be on those non-farm payrolls report, but also we're going to see Canadian employment report as well for September, as well as the IV PMI, plus a number of speakers, including the New York Fed President William Dudley, Dallas Fed President Robert Kaplan, and Bank of England's Chief Economist Andy Haldane. That's it from me. Thank you very much for watching, and have a great day.